Christmas Eve, you had a real good pop on the NASDAQ. And if you're wondering, well, is today, volume coming back in and selling that move? My opinion would actually be no. I think the path of least resistance for today is higher once more. I'm talking about specifically the NASDAQ because, you had this big low volume float day is what they call this. So you got to think, I heard someone explain this really well, so I'm going to re-explain what I heard. I thought this was a really good point. Who is trading during this period of time? A lot of retail traders, right? I mean, I'm not saying that to be like holier than thou. I'm a retail trader. I'm looking at it right now. I don't have big plans to take a whole bunch of trades today, I'll be honest. But who is taking trades? Well, it's probably not big hedge funds who make, collaborative decisions or team-derived investments. It's probably not them because they're out of the office, right? So who is trading is probably retail. And what I'm trying to get at here, guys, is I'm trying to find a good logical reason for why most of the time during holiday weeks, you get a drift up in markets. Most of the time. Not every year, not perfectly, but this year, we're on for the Santa Claus rally. I mean, take a look at that. You had a nice bounce back, even though there was this massive sell-off. So the proceeding with that thought process, if most activity, I don't know if I still wouldn't put most, but a lot of the disproportionate to usual, a lot of the volume during this time, I would argue or guess, is retail volume. Like people who have a little bit extra time who don't usually, they can't trade while they're at work, right? They're doing things, professionals work, that trading is their work, right? Or investing on behalf of clients, they have portfolios. So the thing is, retail, right? Volumes on a proportional basis might jump up during the holidays. So my point is, what do retail traders do in like the stock market? Well, I thought about it and I heard somebody say it, and I was like, most retail traders in the stock market, it's beginner friendly stuff. So they buy stocks, right? Keep it really simple. They buy stocks they like. What do retail traders not usually do? Believe it or not, retail traders don't really short stocks. In fact, if you think about Robinhood, right? Robinhood has changed the landscape for the average stock trader, the average person who has a full-time job. This isn't their everything like it is ours. We're insane for this, by the way. If you're staring at charts day after Christmas, then we're insane. But listen, so if retail traders are like mostly, they just buy stocks in their Robinhood that they like and they hold them. That's probably that's majority of retail volume. So if a lot of the volume is retail, and what does a lot of volume do? They just buy and hold stocks they like, which is honestly smart. Like, to be completely honest, most retail passive investors do far better than active retail traders. So my point is, a lot of people during the holidays on the retail side probably just buy some stocks they like, right? They don't short, right? Retail investors don't really short stocks. I mean, there are like believe it or not, people who like actually get more into this, they discover what shorting is, which is probably like the stupidest thing you can do as a stock investor. It's really hard to call, good companies that make it public into the market. They go up over time. Most of them, on average, not every day, not every week, not every month, not every year, but over time, good companies rise in value. So shorting is just inevitably, it's very difficult, right? Now, here is a surprising one. Why is Bitcoin down? That, I don't have an easy answer for you, other than it's just a crazy, silly, volatile asset. Bitcoin popped up. Again, I actually would have expected Bitcoin to follow suit with that logic. Because who loves Bitcoin? Nobody loves Bitcoin more than retail. Retail loves Bitcoin, right? It's like the retail favorite. So I actually would expect, and I could be wrong about this, as I always can be potentially wrong in markets. Nobody's for sure, right all the time. Path of least resistance for Bitcoin during this period should also be up. In my opinion, I could be wrong. Don't follow anything. I'm an idiot on YouTube. I should just end every sentence with just ignore everything I'm saying. Trading is hard as you know what. And then I'd be being honest with you guys. I try and always be honest with you guys. So, but here's the thing. My best guess would be that retail volume proportionally is higher right now than usual. And what does retail volume on Bitcoin do? They only go long, right? I mean, maybe there's some sophisticated traders out there who have been shorting Bitcoin, but to be honest, that's like trying to stand on the sun and not get burned at all, because Bitcoin has been a rocket ship to the upside, right? So to me, the path of least resistance for Bitcoin on low float, low volume days should be higher. It doesn't mean it has to go up. It's just like if I'm leaning one direction, let's say I have like a 55% chance, I think it goes higher. And that's all I need as a trader, by the way. If I have a 55% chance, and I could be wrong about that 55% chance, right? I could be the 45% of the time that it goes down and continues to go down. But I think there's a slight greater chance that Bitcoin goes up than it goes down. So I am already long Bitcoin. Can retail traders actually move the market? It depends which market you're talking about. If you're talking about like Forex markets, I'm just going to say straight up no. But if you're talking about stocks, especially individual stocks, absolutely retail can move markets. You want an easy example? We all remember GameStop, right? GameStop, which by the way is up 4%. What happened with GameStop? GameStop, again, maybe that's that retail volume is higher than usual right now. But GameStop is a single stock that was moved completely aggressively by just like the retail crowd. Also, guys, we got 400 people watching. If you're enjoying the show, what's wrong with you? It's like Christmas time. Why are you watching trading live streams? Just kidding. I'm glad that you're here. Merry Christmas. And we do have some unemployment claims. So I know why you're really here. You're not here for me. You're here for the news. I get it. Fair enough. So 219,000 job unemployment claims came in. That is, should it be surprising? Not really, because we were expecting 223. So if you got like 195 or you got like 250, then yes, the market would freak out. But the market's not freaking out because we got pretty much exactly what the market was expecting. The market is like this living, breathing organism. It like has ears everywhere. It's watching everything. Analyst communities are, forecasting what these numbers are going to be. They're data mining a million things, and people wonder why trading is hard. It's because you got geniuses, mathematical geniuses making forecasts on what's going to happen and moving the markets ahead of the time. I mean, it's insane. But the point here is 219K compared to 223K is not a big difference. So the markets are not making a big move in response because there was not really too much to surprise us there. That being said, unemployment claims, in general, we could take a second to just think about the state of like the labor market, right? If we take a look at unemployment rate has been rising, but it's not like we're just ramping unemployment rate. Unemployment rate, I always make this point, 5.7% is like the long-term average for US unemployment rate. So with us sitting at 4.2, Like the labor market is not, from the indicators that we can see, the labor market right now doesn't seem to be materially slowing, right? It doesn't seem like unemployment rate is dramatically getting worse, right? 3.4 in January 2023 to 4.2. And think about it, we've had interest rates much higher than they have been in the last 10, 15 years, and yet unemployment rate has only mildly risen. So it's to me looking still very optimistic for a soft landing scenario. Now, a soft landing, what does that mean? Soft landing just means that the Fed is able to, they dealt with this big inflation bump, right? We could take a look at inflation, which, by the way, guys, another thing that I have a couple projects on the books for our team. I want to add, and Edgefinder users, the tryhards out there like me, you'll love this. We're going to add core PCE, and we're going to add PPI year over year to the Edgefinder's inflation reports.
Basically just telling us the US is continuing to do fine. Still supportive of the labor market. So the dollar, in my view, is definitely set to continue up. I'm still looking towards this 110. We've basically done what I said so far. We've broken above 107. So after 107, I was looking at 110, which has happened. So yeah, 110 is still main area of interest, in my opinion. Or well, main area of interest to me. We've got euro dollar. So again, some of you may know I've been very, very bearish on euro dollar. I've been shorting basically since this, since the start of this bearish trend began. So I'm looking for parity. That's the next level I really see coming into play. The Eurozone data is, there's nothing still that is any good or even remotely supportive for the euro really at the moment. And obviously the dollar, the data is pretty good. We're slowing down on the rate cut. So we had a hawkish cut. When was it? I can't remember the exact date. We had a hawkish cut by the Fed this month. So it seems like it's all pretty on course, really, for Eurodollar to continue its downwards movements. The problem is the markets are just so slow at the moment, so there's nothing for me to do. So yeah, it's more a case of just sitting, drinking some beer, and playing chess. Can you analyze Australian dollar, US dollar? Absolutely. So the Australian dollar has taken a huge hit recently, actually. It's not something I would really be buying into. We've had China that's really not helped the Australian dollar or the New Zealand dollar, as a matter of fact. So we are currently at quite a strong support level here. We're forming this double bottom on the daily time frame. Problem is, I just don't see this being enough to support price, really. As I said, the US dollar is very strong. I foresee it to continue being strong. The Australian dollar, not really in a position to be holding its ground against the US dollar, really. In terms of targets, though, I think the most sensible place, at least for now, is just looking at this next low. So really, I'd be looking for any type of pullback. And to be honest, I don't know if we'll get one. The way the markets work, we should really, and I'm using the word should quite loosely. Obviously, nothing should happen really in the markets. That's not how it works, but we are very extended to the downside now. So I would expect some type of a small reversion to the upside, just to slightly correct price before we continue a move lower, maybe down to the 0.578 level. Hello, James. I thought you were not going to be here for a couple of weeks. I wasn't going to, but then the A1 guys sent me a message saying that, if I don't come on today, I'll never be allowed on ever again. And I was like, well, I've got to then, don't I? Obviously, no, I'm joking. Obviously, I didn't say that. No, they asked me if I could do this week. So I said today was the only day I'm free. So I'll come and say hi to you guys. Can we look at the S&P? Yes, we can look at that. But yeah, I've not. This is the first day I've actually been on the chart since, I think it was the last time I was on stream, actually. So I'm going to have to do a little bit of catching up. So So we had the aggressive move. This was the move we had from the rate cut. However, we seem to have basically corrected this full move now. We also have seasonality that's still positive for the S&P and the other indices. So I wouldn't really want to be a seller in this market, to be honest. But would I want to buy is the question. If I was, I think I would just have to look for a very simple 50% pullback, something within here. Now, whether we'll get that is a different question. We might not. And to be honest, it's pretty unlikely that we'd see such a large pullback compared to it just breaking above this level. It seems like the path of, as Nick would say, the path of least resistance will be to continue to the upside here. So for me, there isn't really a valid entry unless we do get this 50% pullback. The next option is if we do break above, we'd be looking for the very simple retest here, take a long position off there, and look for a continuation. Oh, by the way, just a note. I've got quite a lot of family around at the moment, and a lot of them got some new technological gadgets. So the internet might be, well, my internet might be a little bit slow. So I'm not sure what the quality is like for you guys. So I hope it's okay. You make the streams fun to watch. Oh man, I'm glad to hear that. What time frame do you take a trade on? Every time frame, really. 15 minutes and 30 minutes are sort of day trading time frames for me. If I'm going swing trading, then it'll be the H4, the 1 day and the 1 week. Bashi's here. Hello, Bashi. Gold? Sure. I'm still more leaning towards bearish gold, and that's just because, again, I say this all the time, but there isn't a catalyst that makes me want to go long on gold. I only really take gold trades if something's happening. So for example, Russia, Ukraine, Middle East, rate cutting cycle. If there's some reason, some core reason for gold to be going up, then I'll be a buyer. If there's not, and the dollar is also going up, then I'll more look to go short. So that leads me to look really towards a short on this market here. So on the H4, we've got bearish moving averages. We've got this level of structure that's obviously broken below and failing really to get back above this level. So the technicals, they're not super strong, but they are there, more to the short side in my opinion. So I'd be looking for possible trade down to the next low at 25.61. My Christmas was good. It was, well, I was going to say relaxed, but it actually wasn't relaxed. It was quite hectic. I had quite a few people around, and I did some of the cooking and things. So yeah, it was a busy day. I went to bed at like 9 p.m. Just so exhausted. Any thoughts on US oil long? I'll be honest, I've got no idea what's going on with oil at the moment. It depends what your approach is, really, because if you're taking a short-term trade, or a day trade, scalp, whatever it may be, I think you're pretty fine, to be honest. The problem I see now on the higher time frame, if you're going for a swing, I'd be paying attention to this level of resistance. I'd be paying attention to the RSI that's about to become overbought. Now, normally, in a trending market or a very economically driven market, if that makes sense, so obviously a trending market, that's not really an issue. You would just expect a pullback. However, in this market, the reason that that's quite important is that we're basically just in a large time frame range. We're not seeing a very clear trend here. So if we're going to continue this trend, we might be seeing a reversal point now to come back to the previous lows. I cook. I did actually. I used to be. I took cooking in college. I wanted to be a chef back in the day. That dream quickly died, though. I moved very quickly onto something else. But yeah, I quite like cooking. I mean, I'm not very good, but I do enjoy it. I find it quite relieving, quite therapeutic, really. As long as it's nothing too complex and I don't get stressed, and it's quite fun. Could you tell me how I should do my analysis to find market direction for Forex? I do fundamentals. What do I do for futures? Oh man, you're asking the wrong guy. I don't trade futures. The only thing that I've ever really seen on futures is the ICT guys that just have all moved to trading ES and NQ on SMT and all that sort of stuff. I really have no idea, but I would assume you would look at the same thing. So you'd look at rate cuts, you'd look at US economy, and all those types of things. But yeah, the markets are the markets. They all move pretty much off the same things. Obviously off their own economies and their own drivers, but the core concepts are all the same.
So DXY, as I said for the last month or so, don't fight this thing. As we talked about this squeeze and this bear trap in September, don't fight this thing. The dollar is going to be an interesting basket to watch. Look, I personally would not be surprised if the dollar gets a little bit stronger. And when I say a little bit, like it could potentially come all the way back up to these 2022 highs. Just be mindful of that. If we get some chop in here, like this is our kind of broadening pattern area where things get a little bit more noisy. But I just think that the dollar right now is a currency and an economy that's pretty darn solid and resilient, right? Like the dollar, the Fed, everything going on in the U.S. economy, it looks better than the Eurozone. It looks better than Japan. It looks better than every major market right now. So the only argument is like, well, the dollar's over, the U.S. market's overvalued. Sure. But it's like the only game in town that's working. If people want returns, it's been U.S. or nothing. So point is, if the dollar continues to be path of least resistance, don't fight the dollar. I could see this either being noise, or I'd still be interested in buying lows, or we break out and we continue to drift higher and this thing runs all the way back up to levels here. And I would say, let's get really excited about this area. If we are offered an opportunity to short the dollar and it's just a beautiful spot, then let's short the heck out of the dollar and make a ton of money in Forex trading. Okay, I can trade UUP if I want to trade stocks and options. I can trade currencies like crazy, but I am not going to fight the dollar now and say like this is the top. I'm just not. Like this to me is more technical. That to me would be much more of a liquidity sweep, and then we end up finding that it's still going to be a multi-year range anyway. So I would not force trades to short the dollar. I would wait to see if this does in fact come up to maybe this 109 handle and then reject, or it just stays bullish. So two outlooks. One is this: if the dollar pulls back at all to the same lows, 105.50. Okay, if it stays above it, I'm still bullish on the dollar. That's a support level. All right. If it pulls back here for a dead cat bounce and starts to go lower, then yeah, maybe we have this is our shorter term range on the dollar, or a more intermediate range on the dollar. But something tells me that if this just keeps drifting higher and we're in this new momentum phase for 2025, that this dollar index might be getting to 113, 114. It's going to put a lot of pressure on, and look, it's not a good thing, right? If the dollar gets stronger, it's going to hurt multinational trade. It's going to hurt exports. It's going to be you're going to see President Trump probably complain about the dollar. There's going to be more pressure on the Fed to cut more rates. Like, I don't think these are good. So if the dollar gets too strong, it's going to have a lot of consequences. But I don't know. So I just think for that reason, it's like, I don't know where it wants to go. I wouldn't fight it. I wouldn't call the top. I'm not interested in shorting the dollar. I would say what we do get is we get an opportunity at a much better, cleaner technical spot to sell the absolute heck out of this thing and make a lot of money with a lot higher probability with a much cleaner trade. Does that make sense? All right. Anthony, sure. They're disinverted, dude. I mean, if you're looking at the 10-year 2-year disinverted, the 10-year 3-month disinverted, all it means is that based on the last 40 plus years, it's been a really good undefeated recession indicator that we're on borrowed time. If the market, repeats itself, I know we've had the longest, deepest inverted yield curve that we've ever seen from the 10-year and the 3-month, but it's not a timing mechanism, right? Because as soon as you go inverted, everyone's like, oh, recession. Well, we've just ripped to all-time highs for the last 2.5 years. I mean, since the bottom in 2022, this market has gone up 70+% since those October lows. So inverted yield curve is not a timing mechanism, but it is a borrowed time mechanism, because the disinversion typically means a recession is coming, and it's usually within, I think the average is 12 months or 14 months from the disinversion. So that's what I'm looking for. Like, I think there's a lot of reality that the market's going to have to cope with in 2025. I just don't know when. So I'll continue to trade. I'll monitor my risk. I'll wear my seatbelt. I'll wear my hard hat. Try not to lose my butt. Try not to do anything stupid. But I think we're on borrowed time. So if we get through, the first quarter, first half of 2025 without any major scratches and dents, okay, fine. But the second half of the year, I'd be interested to see things like kind of top out. I think growth could top out. I think earnings and valuations at the levels they are, there's a lot of proof. Like the level of expectations, like the bar is set so high right now for Mag 7 has to keep performing well. Mag 7 is really the only little group of stocks that's performing and dragging the whole market higher. I mean, it's either everything has to step up and perform well, or Mag 7 is going to start plateauing and it's going to be a reason for the market to drop. We still have the 10-year yield going higher, which I still think is a huge catalyst for choking out growth. And with it being disinverted on the 3-month, I think it's a matter of time before we actually have to face a reality with a recession. A recession doesn't mean a full-on bear market. A recession could be higher stocks, right? A recession could be, well, inflation's higher. The only way to combat inflation is being in stocks, being invested, having some assets. So it doesn't mean the stock market has to go down, even though we could be in a recession. We also might have a sector by sector recession as opposed to a full on, like, everyone expected recession. And it's like we've experienced 2020, where it was like a horrible month. We experienced 2022, where it was 9 months. We experienced 2008-9, where it was, a year. It hasn't felt like that. There's like, this sector's underperforming. They call it a recession, but it like gets picked up by other, performing sectors. And it just hasn't been easy. I mean, the market's gone higher. It's pretty simple, right? But I said borrowed time. So we'll see. All right, dollar index, any questions on that? I'm going to stay dollar index out of the way right now. The only trades I'm in, dollar CAD long, which I still like. Dollar Swiss long, I still like. Aussie dollar, New Zealand dollar, I'm trading small. I'm working through positions right now. I'm comfortable with those drawdowns and those little positions. I'm not worried about it. Okay, what else? Let me go back to my workspace here. So oil. Still just absolute chop suey. This is a big inflation story. Oil higher. Okay, I just got to fill a Microsoft or a MasterCard. Okay, that's fine. Oil higher, bad for inflation. Oil lower, breaking lows, good for inflation. This is another big component to how this inflation story plays out in 2025. We've obviously seen prints September, October, November. All the prints have been pointing towards higher inflation. Oil, energy prices. The U.S. probably is begging, oil companies to continue to drill, continue to add projects, continue to look at drilling domestically. We're going to look at some major deregulations coming in 2025. If that's the case and we break this floor on oil, that does help the inflation story a lot. If it just stays sideways, it's like we're on the cusp. Could inflation go higher? Yeah, sure. Could it go lower? Yeah, maybe. But I don't know. I think oil, you just have to watch. I don't have a trade on oil. Obviously, it'd be a good little strangle the last couple of months. I just think it's also too volatile where I'm not going to force that trade. So anyway, that's that. Gold. Let's take a look at gold. Somebody said earlier, why is gold up today? It's like, I don't know. Do you think this looks up? I mean, yeah, for the day it's up, but I'm still looking at gold as a potential correction. I still like gold at the 200 moving average. I still like gold at buying lower. And, similar to this big bull trend, if gold is sideways, so be ready to trade in 2025. I think that having a bottom in 2022, a market that looks like this, since the bottom of 2022, okay, this was our bear market in 2022, right? This is what it looks like from October of 22 to now. That's it. So would it make some sense that the market is sideways, where it's not bad, but it's not good? We've kind of capped out earnings. We've got valuations at these levels that are kind of unsustainable. Or would we have a little bit of a pullback? Yeah, sure, maybe a pullback. But I'm thinking more this. If that happens, you got to be ready to trade. So I'm just going to be active, as always. But be ready for it. All right. So gold, silver, I'm just watching. I still like silver. Technically, I still like silver a lot better than gold. I think silver still has a nice measure move towards $36. Bitcoin, anything back into the 90 to 80K mark, I like that. We talked about those earlier. Did the Mag 7s, did some other, added watch list items here. Let's talk currencies, and then I'll let you go for today. Aussie CAD, I'm just hanging on to this one. I'm just going to see if I get I'm going to add more to this if I get a trend line break. It's not there yet. I'm kind of in my risky zone. It's not a done trade. I mean, this is where I'm kind of stopping myself out. But if I get a turning point where this can work its way back up, then break the structure, turn back up here, look at a pattern, stack some buy stop orders, get back to my profit target around 9,400. Okay, Swiss pairs, I'm still going to hang on to the positive swap. Aussie Swiss, I am prepared, if needed, to take this back down to flash crash lows. And then I would adjust my profit target from up here to down here and still make profit on it. So if Aussie Swiss comes back down to lows again, I'm going to stack up some buy stop orders, get these things to cross, get back up to my center high, take some profit. Now that could be target one. If I'm right on a double bottom pattern, then we're going to double this move. So this move, double that move. I mean, we could see this Aussie Swiss back to 62, 6,300, but I'd be happy taking a bunch of profit there at the center high. That's a little bit easier profit target. Yen crosses, I'm not even going to look at them. Okay, do I like the yen? No. I'm going to trade Japanese yen futures. That's about it. Aussie New Zealand, I'm bullish. I'm trying to get back to this previous high at 11.75. Aussie dollar, I'm trading it very small. I am dollar cost averaging into 3 positions, and that gets me all the way down to 6,000. Okay, if we came back down to 6,000, look, I'm not saying that's the stop loss. That's a level that I would say, I would trade this back down to like 5,500. This to me is going to be, look, I will say this. I'm going to play the game of this dollar index through something like the Aussie dollar, which I know that the euro dollar is a much tighter correlation, but I think the Aussie dollar has a good opportunity to be kind of a slingshot trade. So we're facing some pressure to these lows in 2022. The next big level is the 2020 sweep. So do we come all the way back down here again to test that low? Maybe. So I'm going to build something in here, okay? And I'll trade it really, really small. And if it comes back up to this level, look, I can take maybe one loss and then turn these into dollar cost average positions that pay out all the way back towards like 6,200. So am I willing to take this ride down 500 or 600 pips? I'm not going to like it, but I'll keep the drawdown probably less than 3%. So the answer is yes. Because if I can take a 2 to 3% drawdown and turn that into, 5 to 8% gains, I'm going to do that, right? But I'm going to be treating it like very carefully, really small trade sizes, and then build my position. So I'm just testing right now. And if we come all the way back down to like 56, I'm going to test maybe 1 or 2 more times, wait for my structure, wait for my patterns, and then trade this trade. So if I lose a couple here to get back to that high, that's fine. But if I take stacked winners, I can make a lot more money on the way back up. Okay. But I don't think that we necessarily drop all the way to 56 or 5,500. I think we pull back to like 64, 6,500. And if that's the case, I'll take profit. So if this level holds, I mean, it's pretty simple. If this level holds and it bounces there, or if we sweep this low and then we bounce back up to 64, 65, then I'll take profit. It's fine.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.